Hey everyone, welcome to another edition of our Smart Investing Weekly Stock Analysis, where we break down popular companies using fundamental analysis and provide advice here that really doesn't have many strings attached to it. We're going to look at the company fundamentals, give our opinions on what we think about this business. And as always, if you like this video, don't be afraid to hit that subscribe button below because, again, we do these on a weekly basis. So you might pick up some great companies over the coming weeks and maybe some of our past videos as well. Now, with that said, today we're going to talk about Alibaba. Fun name to say there, but a lot of people say it's the Chinese Amazon, so to speak, and that ticker symbol here is BABA.
And actually, Chase, Baba does sound good to say. It's almost like baby. That's what it sounds like to me. But, I was sitting here thinking while you were talking, and one thing, too, on regular financial media and so forth, everybody talks about the high flyers and how great they are and so forth. They don't take time to look at what could be some good value, which is what we do here on our page on YouTube here, because of the fact that we want to see what is on sale. So that's what we look at here. And when you look at our videos, that's what we're trying to do here is find what's on sale, not what is hot and high and everything else. So something we do a little bit unique for the investor.
Yeah, absolutely. And this one in particular, it's an interesting case because, as I said, a lot of people are interested in it because it has great growth rates, but also is there value to it? Because the stock has not done well as of late. And I'll kind of go over more of those numbers, but that's exactly what we're looking for. We're looking for something that's on the operating table, as Warren Buffett says. We want to find something that's perhaps having some temporary problems. Stock price might be down. Oh my gosh, why would this company be of interest to you? Well, because it's down, could be a good value there. That's when you want to buy when nobody else wants it.
Yeah, and I think people kind of realize the thing. Everybody likes to get that deal. They like to hear about a sale. Like, let's go to the store because things are on sale. That's the same thing in investing. Find what's on sale because generally you'll do better longer term and you have an idea of what something's worth. That's the big difference. So,
Yeah, absolutely. But with that said, I think we should get into the numbers first. I know most of the time we have a kind of conversation about the business beforehand, but I think today I want to start with the numbers and kind of
mhm.
have a overarching conversation after we're done with those numbers because there's definitely an interesting story to tell with Alibaba.
Yeah, you said Alibaba again. You like saying that name, don't you? All
Yeah.
right. Let's talk about Alibaba. Kind of look at the numbers here, and we do see that the symbol is BABA. Looking at the PE ratio again, very important. Price earnings. What are you paying for the earnings of this company based on the last 12 months of the earnings and what the stock is now? 19.4. That's not bad. Well, compared to the industry average of 47.6 based on the earnings, this company is a fire sale right now. Looking at price to sales, we see 3.68 versus 2.39. So that's a little bit expensive. Price to book value, 4.5. That's another one that looks like a big sale here because the industry is 15.8. And again, these are valuation ratios. You want these lower than the industry average. And then lastly, price to cash flow, 16.1 versus 22.6. Another one that shows that Alibaba could be on sale based on the valuations of what you're paying for the earnings, the cash flow, the sales, and the book value of this company. Now, you're not getting such bad growth rates on this company. Again, it could be a growth company looking as a value company because looking at these sales year over year, last 12 months, wow, up 40.2%. I would love to see our sales grow up 40%, especially when you compare that to the industry at 23 is almost double sales growth is what you're getting for Alibaba right now. Looking at the earnings growth, could be some problems here. And this is when you have to dig deeper because we do see sales are up 40%, as I said, but earnings down 28.14. Why are they not growing the earnings with such a great sales growth? You want to understand that. No problem. The earnings on the earnings growth on the industry, they saw their earnings climb by 141%. So check into why Alibaba, their earnings are not growing. Probably could be some expenses, something else going on there. Understand that question. Look at the balance sheet. Very important. You invest in a company. You'll make sure you have a company that's financially strong. We've got a current ratio of 1.8 versus 1.2. It shows they have more liquidity than the industry, which is good for those slow times that will come up. And then debt to equity, not bad at all, 15.3, well below the industry is 66.4. So we got to call Alibaba saying they've got a very strong balance sheet, which can weather the storm that can come up. Look at return on equity. That looks pretty good as well. 16.6. That is below the industry at 29.3. We like to see our return on equity usually above 15. So they didn't meet that, but not quite as good as the industry. And then also very important, what does the company make after they take away all their expenses? It's called the net profit margin. Well, here we see it's 16.5, which means for every dollar they bring in, they keep 16.5 cents. Compare that to the industry average of only 5 cents for every dollar you bring in. So that's very positive to see that type of net profit margin. And then usually we'll look at the receivable turnover, inventory turnover, nothing there. I'm not sure why. I would think we could have, you got to understand the business model, because I believe with Alibaba, they don't really hold the inventory. They actually bring other companies in and sell their products. Is that a good way to explain it, Chase, you think?
Well, yeah, and I do know that they have different business lines as well, kind of like Amazon is. I do believe they're involved in cloud computing, and I haven't looked too closely at exactly what Alibaba does, but I know it's more than just selling different items online. They're pretty diverse in their business revenue streams. And the other thing I think is interesting with them, after going over all those numbers, I'm sure many people saw that Amazon was listed right next to it. I'm shocked that it seems like their cash flow conversion and their earnings are far superior to Amazon's and the industry. I mean, I don't know what they're doing to drive higher margins than Amazon if they are in very similar businesses.
You know, and I saw that Amazon there, and I wanted to kind of compare it to that one, but I didn't want to do that because that's not a, I don't want to say it's a fair comparison. It's not what we're talking about when you're trying to invest in a company, which is again Alibaba. But again, you may want to compare your Amazon to Alibaba. I know, gosh, didn't Amazon have a high of like 3,600 or 3,700? Now it's like 32 and change. Has had a pullback themselves.
Yeah, I mean, gosh, put me on the spot here. I don't really remember Amazon completely. Yeah, they're around 3,200. 52-week high was about 3,800. So yeah, they've had a pullback of their own, as you said.
Right. And this is where, again, is that a company on sale, or is there still more to go with Amazon? Again, we're talking about Alibaba today. One thing we can do, Chase, as well, is that if people want to, and they say, gosh, I wish they would look at this company here, we can take requests from people on the YouTube channel as well, or through our website or something. If they have something that's be a good thing, we can take a look at it for them.
Yeah, absolutely. And Amazon might be one of those questions. But let's get back to Alibaba here. I want to look at the numbers, and they do have an ADR. I'll talk a little bit about that here shortly. But everything that you see listed here is based on the Chinese yuan. You can see currently the price for Alibaba is 1,042.64 yuan. You see the 52-week low, well, right near that at 1,035.89 yuan, and the 52-week high. Wow, look at that. They're down about 50% as the high was 2,073.73 yuan. Now, if I go to March 2023, I want to go on an extra year there, you see estimated earnings per share of $73.08. Well, I take that $73.08 and multiply it by 16.6, you would get a target sell price of 1,213.13 yuan. Not quite the 30% margin of safety that we look for, but based off the valuations, the company actually would be in our hold category. A lot of these high-flying tech companies, you missed the boat on it in terms of valuations. They're just so expensive. Alibaba looks to be a little undervalued in terms of its valuation ratios. Now,
and Chase, we don't discuss what we're going to do ahead of time. This is actually, we look at this, we're kind of analyzing it live for people here. One question I'm kind of looking at is that March 2022 is not that far along. Should we be looking at March 2023?
That's what I looked at, was March 2023.
Oh, I thought you said March. Oh, you know what? It's highlighted for me here. I'm not sure why March 2022 is highlighted. That's what I thought you were looking at. I'm sorry.
No, I was looking at 2023, but it's, as I said, it's still got good value to it in terms of the valuations. We do have some reservations that we'll cover at the end here, but I did want to pull up the ADR real quickly as well, and that stands for an American Depository Receipt. And what actually happens there is these holding agencies will actually buy those Alibaba shares, and then they'll issue the ADR so people can buy it in terms of US dollars. I did want to kind of cover here, see the current price for the ADR of Alibaba. Again, here's that ticker symbol, BABA. Well, that's $157.96. And again, you can see it kind of tracks, or it does track, what happens with Alibaba stock, because it did hit that 52-week low today of $155.51. And then you see it's fallen again about 50% from the 52-week high of 319.32. And look at this. I mean, this is the 1-year chart for Alibaba, and it has not been a fun ride. You see, it's just been a steady decline for Alibaba, and I do worry that there could be more pain ahead.
Yeah, because one thing that we're looking at the numbers and the earnings and so forth, and that we just don't know what China's going to do here. And they do seem to be kind of clamping down on things. which does worry me a little bit. But they could also say, okay, that's enough, and then you have a great investment here. So as always, we talk about this is at the start of the people's research because there could be something really good here. I mean, I have some interest in kind of look at this myself, but you got to understand what's going to happen. It's kind of like when you get a company has an accounting problem, you got to kind of dig in and try to understand, is this logical? It's going to work? Well, the same thing here. What will China do? Because I don't think China wants to shut them down. That's not what they're about, but I think they do want to have more control is I think what they want to have.
Yeah, and that's what just worries me here is China. And the CEO, the founder of Alibaba was Jack Ma. Remember
Mhm.
years ago, Jack Ma was like, he was famous. He was all over the place. I have not seen Jack Ma in years. It's
Right.
just, it's very, very interesting how that occurred. And I do worry that China is just such a wild card in terms of how they're going to handle that situation. You look at other experiences that we've seen with Chinese company. The one I'll point out is Luckin Coffee. Is there was complete fraud that was occurring with how they were tracking the revenue and the different expenses, and actually the numbers were pretty much essentially completely fudged. Is can you again trust these Chinese companies to produce actual results, and can you rely on what they're telling us? And the government has a very, very strong hand in what occurs in China.
And you're right because we can't buy it. I don't think we can. We can't buy from Alibaba here in the U.S. We buy from Amazon.
There is actually an
Is there?
Alibaba Express that I believe is associated with Alibaba.
Yeah, and I think I have heard maybe over years one person like, oh yeah, I bought something from them. Very rare. The thing is, I'm trying to get at is that you really don't understand what's going on because we can't tell the president in China now 700, 800 million people or billion. I think it's a
I
billion
think
people
it's
now.
over a billion. Yeah.
It's over a billion now. Yeah, I was going back in my time here. But yeah, I mean, we can't tell what those billion people are doing because, again, we say in China, they have Chinese accounting, which means government accounting, which means you actually do what the government tells you to do. So we do have questions on those numbers. We're going to report the numbers, but I don't. And here in the U.S., we have the gap accounting, and they also have audited financial statements. I don't believe you get that in China. They're not audited. No one audits them. So
I don't think so. And I did pull it up. It's about 1.4 billion as of 2019 was China's population.
wow.
Um, but the other thing I look at too is I know China just came out with some new kind of data privacy laws. And, without kind of reading into the nitty gritty, it seems like they're limiting what businesses can collect and sell in terms of data they're getting from their citizens. But the government's like, no, that's still our data though. But no, you can't have it. You can't
Right,
have
right.
that data for your own business. We want it. And that's just the problem with China. And that's why, as good as the numbers may look, and if Alibaba falls further, I don't care if it went to $75 a share. I just still don't feel comfortable buying it. And if this was a company based in Europe and understood the international finance accounting there, I don't think you're going to have that same type of wild card. But China, I know people, oh, the growth in China, the growth in China. I don't think it's worth it. The risk there is just immense.
And I know you listen to the same conference call I did on one of the companies that we hold, and I believe the number was that they saw their China sales as a
Yeah.
retailer here in the U.S. I believe they said they increased by 30%. I think that's the way to play China
Oh, it
because
was 60%.
was it 60%? Okay, I
Year
didn't
over
realize.
year, and then compared, it was during a pandemic, so they're going to be elevated. But compared to 2019, they were up 40% before the pandemic occurred. So, I mean, that's the lure.
Yeah, and that's a business that we own. We like it because again, yeah, they're selling to China, so China's not controlling them. Now they could say to the I'm not going to mention the company's name. They could say get out.
Yeah.
Then it's going to hurt the company. But we know those numbers are good that they're working with because it is an American company, has to follow those rules. So the numbers look very attractive on Alibaba, but you're right. Like what can the government do? Are those numbers real? So we just want to share this with people because it could be a value trap to where a year from now we may see the 75.
Yeah. I mean, if they keep coming in with different regulatory burdens, I mean, you've even heard it here in the US of, do they want to delist Chinese companies?
Yeah.
That would not be good for Alibaba shareholders. That'd be very
Not,
difficult.
not at all. It's tough because you see those good numbers, you want to get into it, but you got to step back and say, wait a minute, this is a Chinese company, a true Chinese company. Buyer beware.
Yeah. I was going to say, if you hold Alibaba in the portfolio, you might want to say bye bye, Baba.
Ooh, bye, bye, bye. I like it.
Well, hey, anyways, thank you guys for joining us today. If you like the content, again, please be sure to subscribe to our YouTube channel for upcoming stock videos. This again should not be used as investment advice as it is for informational purposes. If you're interested in learning more about our investment firm here and our investment philosophy, visit our website, smartinvesting2000.com. Again, that's smartinvesting2000.com.